Hello students, welcome to my channel Utsav Tutorials. Hope you are doing well as usual. And last time we had studied about rules of debit and credit as per the traditional approach. Today we are going to learn rules of debit and credit by modern approach. So according to the modern approach, the accounts can be classified into 5 parts, and these 5 parts are assets, capital, liabilities, revenue and expenses. So, before we proceed, let us revise what these terms mean. First is assets. Asset means things of value owned by the business. That means these are the properties owned by the business and these have some value. Clear? And capital is the amount invested by the owners in the business to start and to expand business. Okay? And liabilities means the amount payable or the amount owed by the firm to the outsiders. Okay? And capital is a internal liability. And liabilities, when we specifically say liabilities, it means the amount payable to the outsiders. Okay, then revenue means the gains and profits of the business. Okay, these are termed as revenue. And expenses are the cost incurred to generate revenue. Okay, and now we are going to learn the rules of debit and credit by modern approach by one. Okay. So, let's begin. I had told you earlier that whenever we prepare account, it is a T-shaped. Why it is called T-shaped? In fact, if we draw the format of account, it is like this. First of all, you have date, particulars, journal folio, amount. This is one part and this is other part. This part is known as debit part, and this part, second half, is known as right part. That is, on the right side we have credit side, on the left we have debit side. Okay, so here also same format: date, particulars, journal folio, amount. Okay, or roughly we can draw like this. That's why it is known as T-shaped. Okay, now we will study the rules for asset. According to the modern approach, whenever there is increase in the value of asset, if it goes up, then it is debited. When the value of asset goes up, it is debited. And when the value of any asset goes down, it is credited. Okay, now let me tell you once again. When the date of transaction take place, the same date will be mentioned over here, and in particulars we write the other account which is involved in the transaction. Clear? That we will discuss later on in detail. Right now you have to remember, in particulars we write the other account involved on the other side of double entry system. Then here we have to write amount. Same thing on the right side or credit side. First of all, we have to write the date of transaction. Then we have to mention the accounts which are involved against this particular asset account. And journal folio, that is the page number of the journal. Here we have to write from where the transaction has been posted and the amount. Clear? Now, I will be using this type of account to make you understand the rules. Let me write again. Whenever the value of asset goes up, it is debited. And when the value of asset goes down or it decreases, it is mentioned on the credit side. Clear? That means going up in the value will be debited and going down in the value of asset will be credited. Clear? Very simple. Debit means increase, credit means decrease in assets. This rule is applicable for assets. Okay? Now we take on the next. Clear? So we will take up next, capital account. In capital account, the rule is when there is increase in capital, it is recorded on the credit side, and when there is decrease in capital due to any transaction, it is recorded on the debit side. That means increase in capital is credited and decrease in capital is debited. Okay? Now we take on liabilities. In liabilities also, whenever there is increase in liabilities, it is recorded on the credit side, and whenever there is decrease in liabilities, it is recorded on the debit side. So the same rule is applicable to liabilities as that of capital. That is, increase in liabilities is credited and decrease in liabilities is debited. Clear? And now we take on revenue. And the rule for revenue is similar to that of capital and liabilities. That is, whenever there is increase, it is credited, and whenever there is decrease in revenue, it is debited. So we can say the rule for revenue is, if due to any reason, due to any transaction, the revenue is going up, it is credited, and due to any transaction the revenue is going down, it will be recorded on debit side, that is, it will be debited, this revenue account. Now let me tell you one thing, whenever we are going to write accounts, we have to mention the kind of liability, we have to give them name as per the transaction. We will have to open up so many liabilities account, so many revenues account. This I will tell you when we are going to do practical solutions. Okay? Now, so far we have studied about assets, capital, liabilities and revenue. And the last one, according to the modern approach, classification is expenses. Okay? This I am going to explain you. Now expenses. The rule for expenses is increase in expenses is recorded on debit side, and decrease in the value expenses is recorded on the credit side. That means increase in expenses is debited and decrease in expenses is credited. Clear? And now let me sum up all the 5 rules on a single board. Now let us revise the rules of debit and credit as per the modern approach. For assets, the rule is increase in asset is debited and decrease in asset is credited. Okay? And the rule same is the rule for expenses. Increase in expenses is debited and decrease in expenses is credited. Okay? Now for capital, the rule is increase in capital is credited and decrease in capital is debited. And the rule for revenue similar to that of capital, that is increase in capital is credited and decrease in the value of revenue is debited. Same rule for liabilities also. Increase in the value of liabilities will be credited and decrease in the value of liabilities will be debited. Okay? So we can say the rule for AE, that is assets and expenses is same. Okay, that is, in asset and expenses, increase in the value of assets and expenses are debited and decrease in the value of assets and expenses are credited. Okay, and the rule for these three CRL, capital, revenue, liabilities. For these three, the rules are similar. That is, increase in the value of capital, liabilities and revenue will be credited, and the decrease in the value of capital, revenue and liabilities will be debited. So, we can say the rules for debit and credit can be classified into, that is, asset. The rules pertaining to asset and expenses are similar, and that of capital, revenues and liabilities are similar. Clear? Now we will take up some practical problems. Okay, and that will make you much more comfortable. Okay, remember one thing, don't be upset. The more you practice, the more you learn. This is the basic funda. Clear? So I am here to help you out. If you have any query, you can write in the comment box. Clear? So let's move on to practical problems. Okay? So I have taken illustration number 5 of the chapter from accounting procedure from T.S. Grewal. Okay? So that means I am referring from T.S. Grewal. Okay? Now I have noted down the transactions and we are going to analyze these transactions. That means what are the accounts involved, what is the nature of the account, and how these are affected, whether the said account will be debited or credited. Okay? Now we take up one by one. Started business with cash 50,000. Dinesh has started business with cash 50,000. That means there was no business prior to this transaction. So the two accounts involved are cash and started business. Whenever the business started, that means capital is coming in. Okay, so two accounts involved are cash and capital. Okay, so as we know, cash is our nature of account. We will write cash is our asset. Since there was no asset, cash is coming in. It means cash is increasing. Okay, increasing. I am writing just I. Okay, and capital is also increasing because there was no capital earlier. So capital is being capital. It is also increasing. Increase in asset is debited and increase in capital is credited. Clear? Okay. Now next entry is borrowed from Naresh 1 lakh. That means when you borrow from someone cash, that means one account involved is cash. You are getting, that means your business is getting cash. And why? And it is being borrowed by you, by your firm. So it is your liability. Liability means account involved will be loaned from Naresh. Okay, two accounts involved are cash and loan from Naresh. And cash is your asset and loan from Naresh is your liability because you have to repay after some time. So this is liability. So cash is also increasing because your business is getting cash. Now you have more cash in business and you have also incurred a liability. So increase in asset is debited. And increase in liability is credited. So we will write in credit column and cash in debit column the amount. Okay. Next transaction is purchase furniture for cash from Raj Furniture House 20,000. Now the business has purchased furniture. So there is no doubt that there was no furniture, now furniture has come. So furniture is involved. And now here we have to see, since this is a cash transaction, so we are not concerned with it. We are not concerned with the name of the firm or company. So other account involved is cash. Because you are paying cash. Your business is, the cash of your business is decreasing. So cash is your asset. Furniture is also your asset. Furniture is increasing because there was no furniture earlier. Now the furniture has been purchased. So it will increase the value of furniture. And cash being asset, it is reducing, it is decreasing because you are paying in cash. So this is decrease. Okay. Amount is 20,000. And increase in asset is debited and decrease in asset is credited. Okay. Next transaction is purchase furniture from Delhi, say 40,000. Now here we see that the name of the firm is given, but it is not mentioned that it is a cash transaction. So it will be assumed and it will always be recorded as credit transaction. That means no cash is involved. So you have purchased furniture. That means furniture is coming in. Furniture is coming in business, and against that a liability has been increased from that in the name of Delhi Safe. So furniture is your asset and Delhi Safe, it is the name of the company or firm from which you have bought on credit. So it is your liability. Okay. So your asset is increasing and your liability is also increasing. The rule for increase in asset is debited. So 40,000 will be mentioned in debit column. And the liability has also increased correspondingly. So increase in liability is recorded on credit side. So we will mention in credit column. Okay. So this is how we have to proceed. Is purchase goods for cash 15,000. So here we see that the goods are being purchased for resale purpose. Whenever goods are mentioned and you are purchasing, it means it is your purchases. So first account involved is purchases. And other account involved is cash. Because it is a cash transaction. You are paying cash. So purchases is your expenses. Purchases is your expense. There is increase in expense. And an increase in expense is debited. Okay. And cash. Cash is your asset. Since your cash is reducing, you are paying. So decrease in asset is credited. Clear? This is how we have proceeded so far. Let us revise these 5 transactions one by one. started business with cash 50,000. So two accounts involved are cash and capital. Whenever the business is started, we write capital, and since it is a new business, so capital account is increasing. When there is increase in capital, it is credited, and cash is also increasing, so increase in asset is debited. Second is borrowed from Naresh 1 lakh. You are getting cash. Whenever I say you means business. Okay, don't confuse. Means you means what you is business. Business is getting cash, so cash being asset, it is increased and hence it will be debited as per the modern rule of debit and credit. Other account involved is loan from Naresh, because you have incurred a liability in the form of loan. You have taken loan from Naresh, so we will write loan from Naresh. It is being a liability and increasing, so it will be credited. Clear? Purchased furniture for cash from Raj Furniture House 20,000. Whenever there is a cash transaction, buying and selling is taking place in cash, then we are not concerned with the name of the firm. We are concerned with cash, because one side will be cash, one account will be cash. In this particular case, we are getting furniture against payment of cash. So other account involved is cash. Other account is furniture. So furniture being asset, it is increasing, hence it will be debited. And cash, you are paying cash out of the business resources, so cash being asset is decreasing, and decrease in asset is credited. Clear? And now we move on to fourth. Purchase furniture from Delhi Safe 40,000. Here the name of the firm is important, because it is not a cash transaction, it is a credit transaction. So we are incurring liability in the name of Delhi Safe. It is the name of the firm. So why it is coming into picture? Because it is our liability, and we have to repay this amount. So we have incurred liability for purchasing furniture. So furniture being asset is increasing, and increase in asset is debited, and increase in liability is credited. So it will be recorded on the credit side. Now fifth is purchase goods for cash 15,000. This time you are purchasing goods for 15,000 in cash. So one account involved is cash. Cash is decreasing, so decrease in asset is credited. Why cash is decreasing? Because we have made a purchases. So purchases is your expense, and expense is increasing, so increase in expense is debited. So this is how we have done 5 entries, 5 analysis of transaction. So we have done analysis of 5 transactions. Okay, now I will proceed. Now we move on to next. Purchase goods from Mahesh 30,000. So here the cash is not involved, so we are concerned with 2 accounts, and these are purchases, because you are purchasing goods. So one account involved is purchases, and other account involved is Mahesh. Why Mahesh? Because you are purchasing goods from Mahesh and you are not paying to him. That means you are incurring liability, and purchases is your expense. Since you are purchasing, your expenses are increasing, and liability is also increasing. So increase in expenses is debited, and increase in liability is also credited. Okay. Next is sold goods to Kareem for cash. Since it is a cash transaction, you are selling goods, so the name of the person to whom the goods are being sold is not important, so it will not be considered. Sold goods for cash. So you are getting cash, And why you are getting cash? Your business is getting cash because you have sold goods. So sales is taking place. So cash is your asset, and cash is increasing by 25,000, and increase in asset is debited. Next is sales, the other account. So sales is your revenue, and it is also increasing. Revenue is increasing because you are getting sales. So increase in revenue is credited. Okay. Now we move on to next. It is sold goods to Shyam on credit 30,000. Here the name has got value. We have to consider the name because the goods are being sold on credit. So you are selling the goods, and the account involved are Shyam because the goods are being sold to him and he is not paying you cash. So one account is Shyam and other account is sales. Now the Shyam has become your asset. Why asset? Because he is worth for 30,000 right now. He has to pay 30,000 to you. So anything of value is asset. So here the Shyam will be considered as asset. An increase in asset is debited. And sales is taking place. Sales is your revenue. So there is increase in revenue, and increase in revenue is credited. Okay. Clear? Next is cash received from Shyam 20,000. Now one account is cash and other account is Shyam. The business cash is increasing and cash is your asset. So increase in asset is debited. And why you are getting cash? Why your business is getting cash? Because Shyam is paying against the goods sold to him earlier. So Shyam is your asset now. And now there is decrease in asset because earlier he was worth 30,000. He had to repay 30,000, and out of which he is paying 20,000. So there will be a decrease in the value of asset by 20,000. So decrease in asset is debited. Okay. Sorry, decrease in asset is credited. We move on to last transaction of this illustration. Cash paid to Mahesh 10,000. So we can see cash paid to Mahesh. Two accounts involved are cash and cash paid to Mahesh. So Mahesh is involved, cash is involved. So Mahesh was your liability and was your liability since cash is being paid to him. So there is decrease in liability, and decrease in liability is debited. And cash is your asset. It is also decreasing because you are paying money to Mahesh. So it is also decreasing. Decrease in asset is credited. Okay. Now we will revise what we have learned about these 5 transactions. First is purchase goods from Mahesh 30,000. So we can see purchases are involved. Purchases being expenses and increase is debited as per the rule of modern approach. Mahesh has become your liability because you are purchasing goods on credit. So he is your creditor and creditors are your liabilities, and your liability is increasing by 30,000. Increase in liability is credited. Okay. So next is sold goods to Karim for cash 25,000. As we can see, cash is involved. There is no credit part. So we are concerned with sold goods, that is sales and cash. So when you sell goods, you get cash. Cash being asset is increasing, and increase in asset is debited. Why you are getting cash? Because sales has taken place, and sales is your revenue. Increase in revenue is credited. Okay. Now sold goods to Shyam on credit 30,000. So you are selling goods to Shyam. Shyam will become your debtor. So Shyam being debtor is your asset, and there is increase in asset. So increase in asset is debited, and against that sales is taking place. So sales being revenue is increasing, and increase in revenue is credited. Cash received from Shyam 20,000. Cash, so being asset is increasing by 20,000, hence increase in cash asset is debited. And Shyam was your debtor asset, so there is decrease in asset because he will no more become debtor by 20,000. Now we will left with 10,000 only. So decrease in the value of asset by 20,000. So credit, decrease in the value of asset is credited. And last is cash paid to Mahesh 10,000. Mahesh is your liability. So when you pay to Mahesh, your liability will decrease, and decrease in liability is debited. Since you are paying in cash, this is the other account that is involved. So cash is also decreasing. That is, asset is decreasing, and decrease in asset is credited. Clear? So I hope things have become much better now, and if you have any query, doubt, you can ask me. Okay, and see you in the next video. Till then, enjoy, and we will take up more on rules of debit and credit by modern approach. Till then, enjoy good health and spend your time wisely.